Hello and welcome to another update video about Polygon MATIC. So with Polygon we can at the moment at least assume that the breakout is happening. Talked about that yesterday, talked about that in the last few days. This coin has made the impression that it is the one that is best suited for a breakout, and in the end we had that breakout. The point is that we are now forming possibly a diagonal pattern that will only be confirmed as soon as we see 5 waves to the upside. At the moment we only have 3. So don't get me wrong, at the moment there is no guarantee this is going to be a successful breakout. We only have 3 waves as complete. The third wave could be finished. Talked about it yesterday in the video. We said this is now high enough for a lower third wave. Normally you would see the 1.618 extension. That would still be my preference, that we push once more to 87 cents. But it doesn't need to get there. You know, we reached the 1-to-1 ratio, we reached the 1.236 extension, that's fine. And because it's sort of stalling a little bit, it's consolidating, I think we could see one more push to the upside. However, because the point is, let's say 3 waves are complete, ABC, so each of these waves is an ABC, a diagonal pattern, yeah. That's how we can count it if we want to count it bullish. A, B, C, A, B, C, A, B, C. Still, we could see in that C wave, we could see one more push up. It's not guaranteed and we don't need it. Therefore, I'm now on the lookout for a dip into this area, in the wave 4 area. So between, let's say, 78 cents and 81. Let's just double check that. This is based on the Fibonacci retracement levels. A key support level would be the 79 cent level. That's the 38.2% Fib level. But it could come down to 78. If it drops below 78 cents, it would make it very unlikely that this is a breakout pattern, because we don't normally want to break below the 50% level in a wave 4. It would still be technically valid, but it would be unlikely. So therefore, let's say 2 things. If we push up straight away from here, then I think we still have to see the wave 4 a little bit later, and the target area would shift a little bit. If we come down now, we need to hold the 78 cent level. Otherwise, this is probably just an extended correction and we will come down in the end deeper into my target area, because we really only touched it on the upside here. So we had the trend reversal done, at the moment at least. It looks like it, but it's not confirmed yet. We only have 3 waves, and as long as we don't have the 5 waves filled, we never know. So what's my strategy? My strategy is I'm gonna wait, possibly for this wave 4. If we really get to 78, I might actually go in a little bit with a very small position, with a stop loss below the wave 4 area. Or I will wait for the wave 2 dip. So let it play out, let it run. Let put the FOMO aside, and then waiting for the wave 2 dip, and then ready for the wave 3. That should take us quite high. And overall, we're looking here at something like $1.70, $1.80 for this 5 wave move to the upside to play out. And that's where we are. I just want to give you a quick update that we're still on track, that we're just consolidating bullish here. So at the moment, we're just waiting for the market to decide, do we get into this green area? And if we do, I might actually buy. Or do we push higher? And then if we push higher, then I think the key level would be the 1.618 extension that we're going to see. And that would be at 87 cents. And if we get to 87, I would then very much be on the lookout for the wave 4 retracement. So these are the points here that I wanted to mention. Hope you liked the update about MATIC. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.